Hey guys, precious metals, I'm going to give you an update on today. This is the silver chart. Before I go further, 10 seconds. Like if it's of value, share on as many platforms as possible for anyone else that could gain any value out of it. Subscribe and hit the bell. Grab your free course in the mini notes below, and also book a call if you would like to learn more about trading with us. Okay, silver it is. Let's go ahead with the assessment. This is a good move that's occurred for silver. I'll tell you why, because we've been in a rally, a correction in a bull market. So I've shown you overall on the far bigger time frames that it's my assessment we have moved into the reassertion of a bull market in precious metals. Remember, I was not the guy saying every time it was a buy. We even made money to the short side while investing long term in silver. But this move up is the beginning of this basing out here. That is going to be what I would consider to be a large secular bull market in this underlying commodity, and also real money, which can't be printed, by the way. It can't be printed. But you can see we've got a long way to go if I give you context to it. But this is, for me, the end of the corrective trend that began way back in 11. So you've had lows in 15, and those 15 lows were very close to being matched again in 18. So you had 3 years of sideways action only to revisit back down, and you had a period here in 19 not so long ago where it was easing as well. So for me, this is a beginning of a potential move that could go a lot further for silver, and of course gold, precious metals generally, but silver being the high beta version of that. So that's your context, that in actual fact we've begun a move that will probably end up taking out that high in due course, not overnight, and not making a lower low than the previous low that was made, and continuing Dow theory to the upside. Now we've had a good first move from the lows of around 14 all the way to touching 19. So let's take it back to that 4-hour view that I was giving you, and give you some context of what I suspect might be happening here. So having made that good move up here to that tap out high, we've since been correctively to the moving to the downside. So it's kind of like that. And then we noted the structure in our premium community, and we said there's a little bit of either way risk. It's very symmetrical structure. We liked it. It could be upside, but we'll wait for that to trigger, and we cuffed and collared that so that we would get alerts and notifications. Some may have traded it. I've waiting on that for confirmation. I've got a number of good trades on at the moment. So I didn't enter at this point, so I have no position apart from my long-term investment position when I continue to accumulate, and then I accumulate cash when it's in a rally, and then I buy when the basing out is clear again. So we're net investing, and we were trading this leverage long on the up move. So this is a break, but it's now already done quite a lot, so I don't believe in chasing. But there is a possibility that we get up even past this relative high and make another high, let's say somewhere over here, and we could set up a big continuation pattern. So let's just draw that one again, because I made a pig zero of that. Pull it over a little bit and buy a bit more real estate and do that draw again for you. So what could occur is we could get a bigger continuation pattern coming into play here. So you could get a secondary high out as a result of this little fractal here. It would be a fractal within a bigger structure. We could get a secondary high somewhere here, and it could ease again and then again, and we could get a lovely continuation pattern with good geometry for future upside on silver. So it's encouraging. I also want to remind you that the alerts, in fact, that I did get first was my XAU XAG. So what's happening on the gold silver ratio, XAU XAG, put him up there. I'm going to make it a slightly higher time frame, or in fact let's just unleash the eyes there for you. That is the lower line of the great rising wedge. So to remind you again of what you're looking at, you are looking at a mega ascending wedge, squeezing ascending wedge like that. Better to see on the weekly, we can get a bit more perspective. That broke. This is why we called for the trend change. We said this is the trend change because that is a break for us by our draw. And this wedge is held for an immense amount of time. an immense amount of time. So it is a significant move. So I'm talking about that event there. On the weekly chart, you've respected the upper and lower parameters very many times in the creation of this structure. So this is a very powerful wedge, jaw rising wedge, and it's also even shown respect for our midpoints in terms of how it's been top floor and bottom floor in this grind up. So that change, that break of the wedge was a significant ringing of the bell. Now it's natural for every wedge break, particularly on long-term mega wedges like this, for there to be a bit of a return move, because you went really far from just sub 94. It's close to all-time highs for the ratio. You know, it's almost 100 ounces of silver to get a single ounce of gold, to the low there at 79. So you spilled from 94 to 79. It's absolutely natural for it to be a return move technically to the wedge. And what's happening now is you're spilling back out of that. So what I would really like to see, that would excite me greatly, he said, would be for us to get something that represents a inverted HVF structure, which my students are very familiar with, just below the wedge. So sometimes you get this and then you get a very big spill. The big part of the move then takes place there. This would be accompanied by immensely powerful moves to the upside for silver. And that would be a very positive thing. So we look for some sort of that. It might not give me what I want. It may just go into spilling down here. But it's probably going to mess around for a bit before it gets that inertia after that initial, what we often refer to in our game as the slap in the face. It's the end of that move. You were getting too cocky. You were pushing your luck too far. You went into new territory and you got backed off. With a short, sharp slap in the face, and it was the end of the niceties for the evening, as the mademoiselle had drawn the line on your advances. And it all goes pear-shaped from there. And that's kind of, in a way, how it's looking for silver. So I also had mentioned to many of you on previous YouTubes around precious metals that palladium was the one to hold throughout this pullback. In other words, the pullback that is taking some of the steam out, and there's your HVF structure on palladium, and I gave you the number of 1825 on that one, and we've been in it since the break. It's been a great trade, and there she goes. You could have been in it from down here. You can see where that funnel was. You could have been in it sub 1500 in your 1400s, and you're looking for 1825. There's a small example for those of you that never listen but want a last chance to get in. There's a small possibility, as I was briefing my premium guys, so we'll let you have that for nothing, that you might get another little wind up chance. Really strong up legs, gradual down legs, strong up leg. You might get a dissipation again here. You might get another setup for your continuation. You can break into this pattern maybe on the next down leg somewhere at the 1756s, 1760s, and run it to 1825 with a really tight stop just at the 1732. So you can hack your way into that one if this plays ball for you. I am long, I am happy to be long, and I will continue to be long. So there you go. That is precious metals looking like they're getting some fizz back. To be clear, gold was not spectacular. No one's going to get bedwettingly excited about this fella. It is moving up as well, but a more loping type pace. I'm on a small time frame, so let's just give you some context to that. 4 hourly, daily. You'll get more of a perspective, but it is showing clear signs that this corrective period from the 1557 is now starting to, if you just apply the rule of rounding bottoms, you can see it coming in here like that. It is decreasing volume for now. This was quite fizzy volume at this point when we were going up. but I would expect that to start climbing as well. So again, gold looking like it's firming. And you'll notice here, which is, these are called news events, guys. Go to your settings there, pull it down and tick the box news events. We are very data rich coming into this, and gold's decided to move. The precious metals complex has decided to move up in advance of many major end of month October news announcements. This tells me, I suspect, that there will be probably a rate cut from yours truly, Fed. Remember last year, 18 months ago, I said they will never continue reducing balance sheets. They will not continue on this journey of raising rates. It's a complete fad and a fraud. In fact, they're going to go back to QE. They're going to go back to cutting rates. They're going to go back to all of it, and it's coming much sooner than you realized. And they raised rates into the end of last year, and then they were cutting them once. Then they said it's once off. Now you'll be seeing another rate cut. And of course, with the repo rates, and suddenly they're providing liquidity to unknown banks, and we're back at QE again. So there you go. Pretty much that didn't take long for them to round trip and lose complete face. So it's all a fraud and a scam. They probably knew that was the case anyway, but we didn't have any of their baloney about winding back the balance sheet and all of that nonsense, and that's exactly what you're getting. So I'll share also what's a quick view of the dollar index, because of interest rate decisions obviously has that effect on it. So the dollar index was going to be weakening because of a series of rising wedges that it had been making for a while. In fact, let's go right up to the monthly. Let's see, my artistry is being distorted here. There we go. So rising wedge fell out, kind of went a little higher. You can see the selling wicks here, a degree of disbelief, a degree of disbelief, a degree of disbelief, and then the break there coming out of the rising wedge. So it can ease for a bit more. I don't think this is going to be a huge mega bear that, you're going to be running this low type sell-off. Because the other places are also bad, but it does, for example, on our USD Korean won mean that trade is parked up for a little bit still, but the Korean won itself is not strong either. So that is a reset trade, and it's going to be there for the big reset day, and I would expect that's an event only after the next general election, where I expect Trump to get a second term, which is pretty typical. So the dollar is looking soft, but let's be clear, the precious metals, this is a precious metals video, but that's why I'm also analyzing the dollar for you. This is the dollar against the euro, largely, and European currencies. But the gold and silver are strong against all fiats. So if you go against the pound, you'll see that we had jaws on there for you, and we've just had our rest at our second interim, having made second interim. We've given you these targets before, so we've given you a lot of value here on the precious metals front. We told you 15.11. We said once you've run this interim, it will rest. Do you know any other trading method that tells you when it may rest, and that it's absolutely normal in structure for that to occur? I bet you don't. That's why HVF method is the most powerful and the strongest, and that's why learning how to do it properly could be one of the best investment decisions you make. So you've been given the number of 1551 on the GBP. You've also been given it on the euro. So this is a part of a bull market. What will silver do while it's hitting 1551 from 1172 on the pound? Let's see on the euro. Many of you will be euro bound. You are expecting 1600 on the euro, if you remember previous videos that I gave you. So we've given you a lot of value, as I say, on this. So share and share wildly. You could be saving friends and family. I want this message. If I give something out free, I want everyone to get value out of it. Don't sit on the knowledge. Help everybody else. You should be out of your fiat and in this during this period. You should be out of your fiat and in this during this period. I might have to choose a different one. I've got a draw already done, and maybe it's not Oanda, maybe it's ice. Let's have a little look. There we go. So where is the target for those of you that are euro bound? 1686 on your gold versus euro. And where was it resting? You guessed it, straight after that second interim, your biggest and most critical interim before making your target. It's absolutely natural that it does that, and our calls remain good, strong, solid, and people should be invested in gold, not currencies. All currencies. We showed you on the Australian dollar. The Australian dollar already made target. That currency that is the property bubble deflation that's been carried through its currency to try keep their banks afloat. They're letting their currency slip. Look at that falling wedge, beautiful falling wedge, getting ready for the bump up. Little falling wedge, go find it for yourself on a lower time frame. So this is some of what we've given you on this. If you didn't make the trade, you don't believe in me, you don't believe in yourself, you don't believe in your ability to do it. Come on, save yourself. Get out of these monkey tokens that are created by these central banker crooks and frauds, and start understanding that you've got to protect yourself from these charlatans. It's an absolute game of shenanigans here. I mean, look at this Australian dollar against the XAU. Some of you in Australia, poor bastards, they've just been killing your fiat token and importing inflation for you, and printing them up like dime a dozen to keep your double cycle property bubble afloat. Look at that. You've got amazing structure for a little upside pop there. This one has already made its target right there. Oh, fancy it having a little break after making target, isn't it? Who'd have thought it? What a method. You know a better method? Please tell me. You know any method that tells you when something's going to go up, when it's going to rest, when it's going to probably pull back. And by the way, once targets get made, they continue and they reassert in a new in the original direction after having that arrest. The fact that you've made a target is a bullish event. In other words, yes, you will rest for a bit, but that doesn't mean reversals. What it means is you let it rest and you go back long again later. In other words, continuation is the game. So you've got some form, it's a cross between an HVF setup and a falling wedge, I would guess, pushing here. So this Australian dollar against gold is absolutely going to overperform. Not that it'll be any different for the possibility for the others to do the same, but this one's already at target and we barely begun the bull run. So I mean, if you are in Australia right now, hear me now, you do not want to have more than your daily, weekly, monthly needs in your bank account. The rest should be in bullion. Even if you have to later sell some off, keep it lean in your fiat. Hold bullion. Hold bullion. You make great kangaroos. 99.99. I actually buy Aussie silver coins. You get they're probably the cheapest for purity, and you get 4 nines value. So there you have it. There's a link in Bullion Vault below. Go and goddamn use it. Get yourself sorted. Okay, anyway, that's not advice. That's me just ranting. Do whatever you want. At the end of the day, you are the master of your own destiny. Those that take action will be rewarded, in my view. Those that watch will get to have an experience like someone sitting in a movie theater. Okay, so that's it for precious metals. Don't forget, book to find out more about how we will be exploiting this even further and more regular updates and which equities we're trading. That's we've got one we really like that I think is gonna get a multiple on top of the gold. You can find out more about that one if you come on board. And of course we have a non-farm payrolls coming, which you can buy and attend the NFP if you want. And that'll be next Friday. We are 1 week away from the non-farm payrolls of 1st of November. Where has the year gone? Where has the year gone? He cried. Join us for NFP. Grab the free mini series in the notes below. I'm done. I'm Francis, the Market Sniper, giving you a precious metals update. I'm at Acapulco. There's going to be a link going out. Come and buy tickets to attend. You get a special rate if you come through our affiliate link. The link will be tweeted out on the Market Sniper. I'll be at Acapulco talking about this and more. Okay, guys, catch you later. Love you and leave you. Thank you for watching.